Dogecoin, and the entire crypto market saw a massive bloodbath in the last 48 hours. It was absolutely brutal. In this video, I'll talk about what caused it and what we can expect from here. So, here's what happened. The Federal Open Market Committee said that it is in favor of raising short-term rates sooner or at a faster pace than participants had earlier anticipated. Basically, the investors were expecting about 325 basis point interest rate increases in 2022, but recent economic data had offered some hope that those rate hikes might be pushed closer to the end of the year. And this was enough to make people go away from Bitcoin and Dogecoin. You see, people invest in them because they offer a protection against low interest rates during inflation. But inevitably, when the Fed tightens its monetary policy, traders typically indulge in risk-off trades. And this is exactly what happened. Bitcoin shed 11% yesterday, and this decline meant that it reached its lowest price line since September 30th. Moreover, its market cap has decreased to just over $800 billion. The rest of the larger cap alts have lost similar percentages in a day. These include Dogecoin, Binance Coin, Solana, Cardano, and Ripple. And then there was Ethereum, which dropped by over 13.5% to as low as $3,300. But despite all that, some people are still very optimistic. Madison Fowler, a global strategist at J.P. Morgan Private Bank, told Bloomberg that investors should not fear the Fed, noting that its 3 planned rate cuts in 2022 would do little in curbing down consumer prices. She said that growth and inflation will be decelerating throughout 2022, but nonetheless remain above historic trend levels. We think this will call for a much lower risk of a Fed-induced material market correction. And then there was the senior commodity strategist for Bloomberg Intelligence, Mike McGlone, who said that even he believes Bitcoin could come on top of the current situation. In a recent report, he said that Bitcoin is rapidly transitioning toward becoming the world's digital reserve asset. Stretched markets have become common, but commodities and Bitcoin appear to be early reversion leaders. It's a question of bull market duration, and we see it coming out ahead. So basically, he's still really optimistic about Bitcoin in the long run. I want to remind you that we're talking about Bitcoin obviously because of its high price correlation with Dogecoin. As you can see, it currently stands at 0.8. Now, let's come back to Ethereum for a minute. We know that it is the biggest altcoin by market cap out there, and so its impact on Dogecoin is much bigger than everyone thinks. And people are worried because ETH lost a huge chunk too. There are some big players who are skeptical about it right now. In a recent research note, a J.P. Morgan Chase analyst predicted that Ethereum would continue losing its dominance in the DeFi sector. According to data provided by Diffie Llama, its dominance was at more than 97% last January, but its share of the total value locked in DeFi protocols has now shrunk to just 63% due to the rapid growth of such competitors as Terra, Binance Smart Chain, Avalanche, and Solana. And J.P. Morgan predicts that ETH could take a bearish turn in 2022 as the network continues to see fierce competition. Still, I don't think this is going to happen. So, in order to gain an advantage over the competition, Ethereum 2.0 will switch from a proof-of-work system to a proof-of-stake model. As Ethereum's co-founder Vitalik Buterin claims, it will be able to handle up to 100,000 transactions per second once it makes the switch. And this is going to give it a huge edge over other altcoins and even Bitcoin. With that being said, we have to zoom out a little. Haters' returns in the last 12 months, even after the crash, came out to be around 175%. On the other hand, Bitcoin's profits were nearly 16% in the same period. And then there was Solana, which also logged more losses than Bitcoin, dipping by more than 13% after the Fed's news. But still, its 12-month profits came out to be more than 7,500%. And if we talk about Dogecoin, it's been one of the biggest winners among the top 15 cryptos, gaining around 1,400% in the last 12 months. Now, let's come back to the crash and see really how bad it was. In the last 24 hours, there has been over 900 million worth of crypto market liquidations. Close to 80% of the liquidations resulted from traders in long positions getting wiped out. But as I said, some market analysts are still bullish about Bitcoin. According to Smart Contractor, Bitcoin prices are likely to bottom out at around $37,500 but will rise to $100K by the end of this year. And there's another person who think we're going up from here. According to the New York Mayor Eric Adams, Bitcoin is best bought when prices are down. The mayor, who disclosed in November that he would collect his first 3 paychecks as mayor in Bitcoin, said that he was looking forward to that first paycheck in Bitcoin. Now, before we move forward to some more analysis, let's talk about some skeptics. So Peter Schiff, the gold bull, said that Bitcoin is primed for a feverish plunge if it breaks through critical support of $42,000. He said that the devastating drop to the 15,000 zone will be next if that support line fails to hold. And then the popular Bitcoin skeptic Crypto Whale also said that, unpopular opinion, Bitcoin is in the early stages of a brutal bear market and will never surpass all-time highs again. But still, the former Goldman Sachs hedge fund manager, Raoul Pal, thinks that the crypto market cap is going to see massive gains this year. He said that it could easily grow to $250 trillion if the crypto network adoption models continue on their current trajectory. He also said that, if I look at the total derivatives market, it's $1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all of history in the shortest period of time. And if there are 3.5 billion crypto users in 2030, well, the market cap's going to be something like $250 trillion. And then another Goldman Sachs Group report laid out how Bitcoin might surpass 100,000 as it encroaches upon gold's market cap. In the report, they estimated that at approximately 700 billion float adjusted market cap in the store of value market, Bitcoin currently makes up just 20% against gold's value of 2.6 trillion. But if Bitcoin delivers a compound annualized return of around 17% over the next 5 years as investors continue to adopt cryptocurrencies, then it could reach the 100,000 price target. Now, let's talk about some bad news. The leading crypto market analyst Michael van de Poppe explained that 42,000 is the crucial support zone for Bitcoin to hold. He also said that, in order to actually sustain the upwards momentum, or at least sustain a higher low structure, you clearly want to see it hold this green zone of $42,000. This is the one that has to hold, especially given that we've got this breaker here. And as we can see here, Bitcoin has already below that level today. The point is that we'll probably see another round of correction. But considering the Bloomberg and Goldman report, in the long run, we're still on track to hit 100K for Bitcoin. Now coming back to it, we're going to talk about a Bitcoin fractal. If you don't know, a fractal is a repeating pattern which mimics the priced action of the past. When fractals appear, they aren't a perfect repeat of the situation before, but can yield similar results. The fractal that we're talking about is a setup from October 25, 2019, known as the Xi pump or China pump. So on that day, not only did price action reverse, the resulting short squeeze and FOMO led to a record-breaking 44% climb in a matter of 48 to 72 hours. It was the third largest single-day rise in Bitcoin's history. Now the thing is that the same setup is brewing when Bollinger Bands are turned on. So a 44% climb would take Bitcoin back above 61,000 per coin, and it could happen in just days. Still, I want to remind you that fractals aren't statistically proven patterns with any probability behind them. They simply can appear to look like past price action, but completely fail to yield the same results. Now, another interesting thing is that the 50-day moving average is rapidly approaching the 200-day moving average. If you don't know, when the former crosses below the latter, it's called a death cross, and a similar death cross was seen around October 25, 2019 too. So all in all, this is something you need to keep in mind as we move forward. Now let's come back to Dogecoin. It's currently trading around 15 cents, and because of the bloodbath, it has shed a huge chunk of its gains after Elon's tweets. The transaction volume has also dropped to just over $1 billion, and only 52% of the holders are making money at this level. But I think we need to remember that cryptos like Dogecoin have been, and always will be, highly volatile assets, and it needs immense patience to be in this for the long haul. But as we've seen, Doge and Bitcoin have yielded positive results in the last 12 months, while assets like gold have yielded a negative result. So the point is that because of this, a lot of institutions and retail investors will keep buying Bitcoin and Dogecoin, and they aren't going anywhere.